Oops, let me turn the mic on. G'day traders, this is Sam here from Trade to Prosper to give you another update on the cryptocurrency scene. Starting off with Bitcoin, and what we see here is pretty much a range, as you can see, and pretty much pressure to the downside. What I want to discuss today is look at Bitcoin at this current level, what's likely to play out, look at the bigger picture as to where we are in the macros perspective, look at other indicators like the US dollar, Bitcoin dominance, and all other indicators that I can think of at the time. So let's look at the big picture at the moment, and let's see what it gives us and how we're tracking. So I had this chart, and obviously a lot of people probably seen it, the ones that follow me. And what we also know is that we much talk has been done with this 200 moving average, SMA, and as you can see, if we come up close, we're way down below it, and we're on the 0.618 level as support. Actually, we're just below it as well. So let's just get in there a bit. So we've got that as a main resistance, the moving average. To go bullish, we need to go above this as a first point. Secondly, this range is much strong candle to the downside. This is the daily, so we had a bad day yesterday, and that's pretty much attributed to this, which is the S&P 500 or the Nasdaq with the interest rates announcements. We had that little rally when they first mentioned, and then we had this dump. So the S&P 500 is also aligned with its weekly 200 moving average, interesting enough. And if you look at this, it's a key level. I had this some time back, previous support, previous resistance, and we had support as well. So this range is going to be important. First things first, we have two wicks in the making. This is the daily chart, so let's see if we can get a bounce. If we do get a bounce, we have a number of resistance levels, but we might just go sideways. Might increase if the price was factored in this drop with the announcement. Then there's probably no more to go. So the Fed announcement with interest rates was preempted, and the market responded preempting the announcement, I suppose. I think it was leaked on Monday, and the market responded accordingly, and it was prepared for that announcement. So does that mean that we're going to go up or go down? That's the hard part to it. The fact that it dropped this was actually a move that I was expecting to go up, but when they announced the announcement, this stayed sideways for too long. So when the announcement came, it dropped, or the announcement hint, this dropped, and therefore we didn't have that A, B, C move to this box, this area I was looking for. So Bitcoin therefore dropped as well, and so we are isolated from it. Similarly, I do believe we're going to get a bounce here. Now the question is what's going to likely take place, and that's what we're going to talk about. Before we get to that, if you look at the big picture of things, we have this cycle, and we have this schematic. If you haven't seen it before, this is a topping off schematic of Wyckoff's. It's a schematic number 2 of Wyckoff's distribution. So we've done that with this red level as the neckline. We had this component play out based on the life cycle. We were here. We have this little. I think we're right here and right now. So we dropped. We're almost making the bottom. I don't think we're there yet. I think this is just going to get another bounce, and the 200 is going to be most likely the resistance, and then we're going to go down more. The reason why I believe we're going to go down more, and and Bitcoin has a habit of doing this, is flushing out everybody. There's not enough fear in the market. 20K is still a good level because it's the all-time high in 2017. So people are expecting that this should hold, and what they will do is that there's some hope, and they want to crush those hopes. They want to crush those hopes. That's what I think. When I do this Fibonacci extension, let me just get rid of these diagrams because I've already talked about them. Give me a sec. I'll leave that there. I have a number of reasons why I believe the 12 to 15K is likely to be it, up to 17K. And I'll have to explain why as we go along. But at the moment, this level is going to be volatile. We have previous resistance, and if it comes down a bit more, which is just in the very high 19Ks, it wouldn't surprise me, and I'll explain that as well. So I have this macro picture, and I'm going to explain why we're going to go down there or further down. That range is interesting to me, and then and you can see this macro ABC move. So that will be a A. Somewhere here will be a B. Who knows where? And unfortunately, C might be down here, or C could be a double bottom. We don't know. So we can do that, or we can do that, and I'm going to go through those scenarios as well. So let's go and look at the close up. What's going to happen? What's likely to happen? So do not go all in. That's my point. And number two, how we trade this range? Well, I do suspect that there's a lot of shorts been coming in from there, a lot of shorts, and even probably here some shorts. So they're going to do a short squeeze, in my opinion. So if that's the bottom, my thinking is that the market makers will we'll still go there and then push it down to roughly this area, 20K, just so all-time high is right there. I've got this trend line area, and I think it'll go up and then back down just to shake people up. So we have this channel, and the channel roughly has resistance in that range at the moment, what we can see. So we could potentially go up to that level before we go back down. But if we do go up, if it's fast like this, then we get a snapback down, collect the liquidity of all the shorts. All the stop losses will be here as well. Stop losses. And also as it comes down, breaking this level, more shorts will go in and they'll get that liquidity and then push it up. Now, what supports that? I'll bring it to you. This is the heat map. Doesn't mean it's right, but the heat map, whoops. Let's go. So when we look at the heat map, and this is, I think, Coinbase, all right? You can see the heat map roughly to 20,000, yeah, exactly, just below 20,000 to 20,000, and a bit above to 20,050. This yellow intensity is pretty much showing us the orders in that range. We can see that the yellow intensity here, which is all resistance, intense resistance, and it's been playing off. If you look at the previous levels of intensity, these have been selling off points, and so holding the price down. Currently, the holding point is 20,880, and you can see this volume as well. So this heat map pretty much shows that there is pressure to the downside. Here we have this all-time high level of 2017, with big orders. And if you look out to the right, the order books, that's not going to really help at this point. But it does, oops, it's very sensitive. And if you look at the bigger picture, we have a lot of orders down here as well. So each intense yellow is, and you can look at them now, they're not as big because that doesn't mean they can't come back in. But the 10K and the 15K seems to be a lot there, much more. 15K is a good range. The others are a bit smaller, and even down there at hold on. So that's 10K, 15K, 10K also. There's got a lot of orders there, but I don't, that's going beyond. But as you can see, back to my original comments, we could get that short squeeze. All right, let's just get this chart out of there. I'm just having tea at the same time. I tend to get I haven't got over this husky voice or dry throat issue from my COVID days. All right, so if we look at that, that's what I'm looking at now at the moment. So we're going to have some whiplash, whiplash around here. And if you want to see this chart as to where it's originated from, we can stop moving. I can just get rid of some of these lines. Okay, so let's just, I like keeping it clean, otherwise it gets cluttered. All right, so if we look at this bigger picture, I'll go to the 4 hour. The 4 hour, you can see downward pressure and a lot of wicks on the 4 hour, so it does match the heat map, and this is ever so slight trend line. And if it breaks that, we are likely to just more shorts to come in, and as I said, opportunities for the whales. All right, so where does this go? If you look at that from a bigger picture, it's pretty much a channel that's lingering from way up. And anyway, this is an extension, so there is confluence as to this channel being support. And like I said, let's see how we go. Let me get back that picture back there. I'll get rid of this for the time being, and I'm going to give you another chart to look at. So just looking at a bigger picture, it's not complex. You have heard, actually we can do this. So what I've done is from the swing low, so what I'm looking for is the Fibonacci from the swing low to this pivot point is 1. Yep, 0, 1. And we had this fib extension to the golden ratio, and this part pretty much just went above it. And if we were to look at, get rid of that chart, you can see why from that Fibonacci level, whoops, I shouldn't touch that, we have this golden ratio as well as my 0.618, which has confluence, previous very strong resistance area. We've been there for ages, so that's going to be a very strong support level. I'm not saying it's going to go down that far at this point, but I do believe this range. So if we do that, the top as 1 and the bottom as 0, you can see the 0.5 right there. Okay, so the 0.5 Fibonacci level is about 14K, 4.5K. So I think that's the bottom. If this was to drop to that level with this wave, I don't think it'll get there, but you never know. But you can see if we're getting close from the other perspective, if we do this, the big picture, all the way to the bottom, and we use that as 0 and use that as 1, you see 1.618 is also at the top. And we've got this 1.414. Let me just get that out the way. And we're going to Fibonacci a fair bit. Now you can see the 1.414 also coincides with this, that level there. However, it's not exact, is it? So if we look at the value of the 1.414, 17,800. So to me, that is a significant golden a fib level. These fib levels are pretty important because this 618 was pretty much perfect, right at the top. So it tells me that the bigger macro Fibonacci took place. And if you look at certain parts of this big macro Fibonacci, it has confluence. So now what I'm doing is I'm showing you the range that it can for this wave to be. So we're having our macro wave to the downside, and if we get closer, so now we have established this Fibonacci. We know that's the all-time high, and we know this level is also previous resistance and support, and the fib extension, let's see, get this orange one or blue one. I'll just add that. You'll see the fib extension from the swing high to the swing low, back to the swing high. We have this level of the 1.414 in that range as well. So we have a number of confluence where from this level to this level is somewhere in that range. We're going to have a target based on initial. Where's that diagram I had? Where did it go? Did I get rid of it? Oh, I did get rid of it. That wick-off cycle. So the wick-off cycle is well, where is it? Give me a second. I need that chart. Where'd it go? Oh, there we go. It's all the way there. Okay. So bring back to this initial cycle, because it's easier to explain, I suppose. Let me just fix it up so you can see it a bit more. So we have our resistance level, which is the 200. We have this resistance of the 618. Where is it? This Fibonacci extension, which acted as support. So if I click on that, make it bigger so you guys can see, and maybe I'll make it black. There you go. So 22,000 is probably resistance. I also have 24,000. So let's go into the Bitcoin. 22 to 24. This is 22. So 22 makes sense. That's our 22. And now 24 is pretty much, see where we've got these wicks, rejection. That is in the 23.5 to 24 range. And if you go across, there is something, I remember seeing it somewhere before. Here we go. This was resistance on the way up, which is about 24,300. So even if we do get a bounce, I don't see going above that. Okay, but so I don't see it can. This could be just for the short term. This could also possibly, if we to break that level, we are to go to that range at most. So we have a few levels if we were to break this level. if this was to continue on, which is the outside of the which is pretty much overextended in this channel, it's still likely to be a target, and then we're down. And that might equate to some another type of bear flag on the way down. And it sort of fits into our model of going to that target. Okay. Why? So I did talk about the squeeze and potentially moving up, and I think it corresponds to our Bitcoin dominance. Bitcoin dominance is back down to this level, which I expect a bounce for Bitcoin dominance. So we have previous resistance, and we're likely to have support here. So I think Bitcoin dominance will go up. Don't know how much, no idea, but short term, there's going to be resistance for it to go down. So for it to not to go down, it has to be volatile, and they're also going to get smashed for the short term. And that sort of fits into the model of this type of whiplash. And if it drops hard, if it does fit into the narrative of Bitcoin dominance going up, finding support here, and the rest of it's going to be very difficult to know what's going to happen here. Is that a continuation pattern or a reversal? My thinking is it's going to be a continuation pattern to the upside, because I do believe we've still got more lows to do, and Bitcoin dominance, this is a reversal pattern, if you haven't noticed. So Bitcoin dominance has a reversal pattern. Let's see what the reversal pattern or this structure has. What's the target for it? Some people say back to previous highs. I like to just measure the target. So if we were saying that is the high, that will be my initial target, and pretty much sort of corresponds to this resistance area, and I think that's where we might find the bottom initially. Could be wrong. So that's a Bitcoin dominance, and in the short term, we're going to find some support, and we're going to have this sideways, and who knows, but I do believe we'll knock on. It could be a symmetrical triangle, or it can be an what do you call it? An ascending triangle. Something there. Could be inverted head and shoulders. Don't know, but it's gonna go to this target somehow. Okay, because we had this reversal structure, and it's pretty much broken out. That reversal structure, I can't see it coming back down like that. It doesn't make sense. But there is that possibility. But we're talking about probabilities. So what is our SP 500 doing to support us in that mindset? I do believe so. The next Fed announcement will be a month from here, I would imagine. And in that short time, we might go ranging, really. And then we can probably have a breakout and then back down again. Interest rates aren't going to change. I still see this. We can have that real bad episode of the COVID scenario where not the COVID, the 2008, I think it is, where, so in many cases, if we do this, we lost 35% there, and this was 2008, and I'm thinking along these lines for SP 500, 57%, and so far we lost 24%. I think we're in a much worse situation with the mass printing. Quantitative easing? Well, I'm not sure exactly what the words were. Quantitative, that's right. Quantitative easing. So I do see potentially, at the minimum, that we get to here. At least the bottom of this channel. Is it going to go worse than that? So I do think it's going to go down to that level, and maybe a reversal there. And this 200 moving average is just holding things up at the moment, like it did in the past. There we act as support. So we're going to just bounce around here and then come down, because we had this strong run. And if you think this is as wave 3 to 4, and that's wave 5, we could be in a massive bear market as well. Some speculate that. So had that fixed Bitcoin, I've got no idea. All right, I don't think Bitcoin could go. It could go down to 8K potentially if it does that. Don't know. That's going to be scary if that's the case. So let's not go there until we see more evidence. So that's how I have with that in perspective. So we covered the dominance, we covered the SP 500, the yields, US yields had a resistance, and so Bitcoin and the US dollar. Where is it? Where's US dollar? Let's have a look at US dollar as well. I think that was it in there somewhere. Okay, so I'll need to just flip it around. Give me a sec, guys. Let's just have a look at the US dollar. So pull back more than I thought, which is good. But you can see it's pretty much an uptrend. And if you look on the bigger picture, it's broken out of this structure. It's at the resistance level. I do see this now. I've got more information that this might be, could come down all the way there and then back up. And it might just give Bitcoin a chance. But I just don't see it coming down too much. That is support there. All right, so if it comes, it probably touched there. Worst case scenario, it comes back, retouches that, and back up. But the US dollar is definitely in a macro uptrend. Next level is there for resistance, but I think we'll get to this level, 120. So we have our levels with the Fibonacci, and 0.618 is there for this structure. So the 0.618 is roughly here. I do see this becoming a strong resistance. We might come back. That might be it, enough for the coming months, and that's our bull run potentially. And SP 500 finding some relief. So that's, I suppose, the narrative that I'm looking at, and so what we covered is pretty much the reasons for coming down here. Now, I want to just give you a quick lesson as to, I'm not sure which chart. Just hold on for a sec, and I'll get another chart out. Now I've got to figure out where I'll put it. I did it yesterday. Okay, okay, here's another chart. So I'll just bring that across. I'll get into that as well. Just bear with me, guys. Be patient. I was being creative yesterday, and I want to just bring that up. I've got many charts open. That's the problem. I'm bad in managing the amount of charts I have open. All right, so okay. I'll have to bring out what I posted in our group, because I can't find it at the moment. So where we go. Here's my Telegram group. Let's just, can we get the original size? Bugger. I had it. Oh, this must be saved. File. Bear with me. That's not it. And is it this one? Okay. So I got this chart that I did yesterday. And I've just done a few things with it. This is just a theory. So what we can do is, can we edit? Edit. Yeah. Oh, it doesn't give me that chance, does it? Oh, that's what I need to do. I'm still getting used to the Mac. Okay. Get the scribble. All right. So we are here today. And like I said, we have this range. So in yellow, we've got that range. We've got that resistance level. And we've got that range of where it could come down. So currently, we're roughly here. And if we're to drop, I do see this type of formation taking place. And if I measure from that level to the bottom, yep, we have the 0.5 Fibonacci acting as resistance, which makes sense because we'll find there. So this is our macro A, B, C. I do see that happening. More so. That's an idea. And now, how does that fit? Well, it does actually fit well. If it was to come down here, right? Price was to come down from this level to this level here. We have that trend line, this orange trend line, and just continuation. If we get that rally, relief rally in a bear market, and it drops, this makes sense. This is a strong level. So from 10 to 13K, and we've got a Fibonacci. So here we go. Top is 1, bottom is 0, 0.382. If we would flip it around, it will be the 0.618, which has confluence with this all time. So what happened is, remember, we started our bull market from here, really, and we have the cycle pretty much returning to this level. This is going to be a strong level, and we're going to have a lot of wicks. This is where I'm looking to go a lot in. It can probably go sideways as well before it goes up. So this model is come from this here. We are actually pretty much aligned to this in many aspects. We had this phase. We had the big move down, and that phase there equates to this. This phase is going to equate to actually this drop to me. So hold on, let's go. This drop here is pretty much what we're doing here. That's what I'm looking at. This going sideways is pretty much this part here, and then the next drop is pretty much, that's how I'm aligning it, and that's where the big accumulation is going to take place. I've actually cut some pieces out of this as well as this and just combined it just to make that visual aspect. This could be a descending wedge. It does fit into it. It could be also a channel like that, where we go sideways and then break out going sideways. Can it go lower? Definitely can go lower, but I feel safe with this Fibonacci level here. It's a weekly. Now, what I've done also, and I'll bring it out. Actually, now it's probably come to mind. Hold on. So let's bring this out. Now it's just come to mind where that chart could be. If I do the year monthly, let me just have a check. That's Coinbase. Could be one of these. No, that's not the chart. It's Coinbase. Let me see. USD index. Where's the index? Okay. So I did my work on this. Here we go. So what I did was I looked at the yearly chart. Actually, okay. It's not the chart. I thought it was a chart. It's definitely not this one. All right, let's look for it. If I just stuck to one chart, it would have been good. What I did was a yearly chart, monthly chart, and I'm sure that was the case. No, that's not the one. Sorry, guys. Let's see if this has got the yearly level. Get rid of that. Get rid of that. US dollar we've done. Don't need that. I thought this was the case. Or maybe it's on Coinbase. Give me a sec. No, it wasn't. Okay. All right, so let's do this. If we look at the yearly chart, we see that the yearly resistance, it's not going to scale. Give me a sec. Oh, far out, come on. Trying to get the scale so you can see it. It's just too much cramped. So this is the yearly chart. And you can see if we were to grab this and magnet, we put our yearly level. So we'll do that. You can say yearly level. Body of the candle. And we'll get the next one. That's the wick of the yearly level. And our other yearly level is that there. And you can see how the yearly level is dropping, right? Now we'll go to the monthly level. And we'll look at the charts with the yearly level. And you can see the yearly level right there equates to this with the monthly chart. Again, that is about 14K. So we would expect that this will come into play as a strong support. And then our next big macro support is down here, isn't it? Which is about 10K. So we have levels that it can play out. And my point is these levels, if this yearly level doesn't hold, or the monthly, it's also a monthly level, this has a lot of confluence for support as well as this. The cycle started from here, could end up, I do expect it to come back down to that cycle. So the cycle eventually comes back to this range. This range here is likely to be our bottom before we go back up. There is that bad case scenario where it can probably drop more. Some have it, unfortunately. And if it's a real bad market, it can come back down to this level. If it's a real bad bear market for pretty much everything, stock market and all the rest. So it can potentially come down there, but there's no point of thinking about that because no one knows. So what we do is we treat each stage as it comes down. If it doesn't come down, great. But what will give us the clues will be our indicators as well. So if I can just hide that for a sec. So on the monthly level, we are pretty much close or even past the bottom, to tell the truth. But we need the monthly to close before we can say where it is. What we had in the past to feel confident that the bottom is in is these crossovers on the monthly level. You have a nice, what we have in many cases, we have a big bearish dump, and then a big green candle followed by the dump. Could be a bit later. Here we have a big dump, and then we have this bullish month candle. And when you see it cross, this will cause them to cross over. And here we see it make a crossover. Here we don't. So if you want to play it on the monthly perspective, this will give you confidence that when to enter when these cross over. So this is a wave trend. It's a bit earlier than Bitcoin because the crossover actually is probably the same on the monthly. And then I have one more indicator, which is this one here, the Phoenix. The Phoenix is actually pretty good. Could be a bit earlier on the weekly as well. When these guys cross over, when the green crosses the red and is above 50% with momentum on the monthly, we have a bull market. And we don't have anything like that. You can see this is all downward pressure. The red's down, the green, there is downward pressure. There is no relief. So on the monthly perspective, we need a good month. All right. If we go into the weekly perspective, they just clean all that stuff up because that was all monthly related. We might find some opportunities. When you use the RSIs right at the bottom type of thing, that's not going to help us really because similar to the top. Give me a sec. If you know RSIs, they're what's the word? Delayed. So for instance, this RSI is at the top. Yeah, does that mean we sell? No. Overextended, yes. But does it mean that we hit the top? No, it doesn't. And you can see how much it's gone up. So the bottom's the same. If the RSI is bottomed, it doesn't necessarily mean we're at the bottom. In some cases it does. Like here, you want to see a bullish momentum kick in. And on the weekly, the RSI has different levels, but this level could always be lower. So, and using the previous ones is just coincidence, really. You want to see on the weekly, so we're looking at the weekly, we want to see this crossover. we want to see this start turning around on the weekly, which really requires a weekly bullish candle. I'm looking at this scenario. This is falling. We have strong momentum to the downside, and what we're looking for is crossover, a good week. This has bullish divergence at the moment, but this is still way, way, way below. The green, the red, and the blue, which is the average, they're way, way below. So when we look at previous charts, if I just minimize these ones, we can see as an indicator, when we hit the 50%, the green, blue, and red, we have momentum. There is other strategies around this, but I'm just simplifying it. Very similar to here. When we had it, we went bullish. When the green and the momentum go above 50%, even better the red, you can be confident. See how we got this bullish momentum crossed over? That's the first signal, but we need a follow through with this indicator. So that's I use these indicators as strategy. I use the candles, and I'll look at a few other formations on a small time frame to know the bottom. Very similar to the top. When these guys cross over, that's your warning. Dropping down. The bearish divergence, it's coming. In this case, when it drops below the 75% or whatever it is, it drops. Now, we can also have, in some cases, this wave trend comes in handy. You can also say when that breaks, that trend, that's exit. And you can see roughly that is a good indicator. Similarly, if we have this line here, if this crosses over, I'm thinking that's the first signal, and then we want to see it cross over this trend line. And this will also come into play. So that's when I will know roughly when I'll be looking for the reversal. If that helps you guys, that is on the bigger picture how to tackle this trade. Okay, so here's the tutorial that I want to talk to you about. It's not my idea, it's someone else's, but it makes sense to me. People, you need to know how to count the waves. Excuse me for that phone call. He seems to do it all the time when I'm doing a live session. So what we have, now let me see where I've done this. Big picture. So this is a short-term picture. We're on the 0.5 Fibonacci, yearly level. 0.618 is probably likely to be it, 18,000. The 0.5 or the 0.618 is, so we're just below the 0.5, so we might be able to get to the 0.618 for the reversal. And as I said, the squeeze and the reversal. Anyway, we have this also in mind. From the big picture perspective, we have our bull run. That's our highest point. We have a lowest point, and we have another high. So that's basically, that's our one. That's our two. And that's our three. So with the 1, 2, 3 move, and then we have our macro. We have our A, B, and in this case it was really low. All right, COVID event. So this is a cycle. Before, actually, let's just change the color for this, so it's a bit clearer for you guys. Similarly, this is our bull run. We have our one. Or is our one there? That's our one. That's our two. This could be our three, wherever it is. Yep. Oh wait, hold on. Let's just do this. That's our one. We're looking for our two, the bottom. Actually, our 2 is going to be there, roughly. So the bottom's going to be somewhere, because I'm looking at this ABC move. So the one I'm talking about is the big picture move. What we have here is the medium macro, which is our A, B, C. But from a big perspective, that will be our 2. Very much like that. I don't know where it is, but if it's here, we'll know at the time, and then we'll have some confidence to work out the rest. Because we need so one. What am I doing? Yeah, 1, 2, 1, 2, 3. Right, wherever that is, based on this scenario. So we go 1, 2, 3. Similarly, we've got a 1. We have our 2, and we're going to have our 3, and then we're going to have our ABC. Wherever that takes place. And I had it, I think it was July 2023. So I'm not doing to scale. Or even longer, actually. That's a minimum. And then when we have this ABC, I don't think it's going to be like this COVID event. It could come back down to here. We have a B and we have a C. I don't think they'll go below that at all. Just like that. This COVID one didn't go below that point. It actually, if we were to play it safe, it would have probably been, let's just pick out, this would have been our bottom really, I think, with the 618, but the COVID just wicked it further down. So similarly, if that was our, whatever it was, we can do that if that's our bottom, and then we are C. Just reverse that for a sec. Our C will be here, back down there. So we have an A, B, C type of thing, and then we have the bull run. Then we have the next bull run, is my thinking. Yeah. So if you look at it from that perspective, actually, it's not a bad thing, is it? Look at this. Ignore this. That might work, actually. That might actually work. So that's I'm using this scenario of history. So if I was to get that, I don't want to do that. Just bring that out as well. Something like that. I'm looking. So we just need to know our pivot points. We need to know what takes place, and the rest is going to be much more. We're going to be much more confident. And so how do we know those points? Remember, I said about these indicators will help us find them on a weekly basis, on a monthly basis. We'll have some idea that we're on track. That is a thesis from a big perspective. And so in terms of timelines, that's another session. But so what you do is you plan and you track and then you tweak. But I have a plan in place, pretty much explained it, using these indicators, using these levels and monthly levels, and hopefully that gives some results. When it comes to Ethereum, short-term Ethereum, so I'm done with Bitcoin, if that's all you want. I'm going to go to Ethereum at the moment. Ethereum has done what I suspected, and I was 100% right. So far, so good, which was it did this macro ascending wedge or in head and shoulders, and the target was, we reached our target for the alts. So Ethereum is part of that alt group, maybe an exception, but I have this blue trend line, and we went below it, below the 200 moving average on the weekly. So Ethereum, if you look close, we are way below the 200, and we're pretty much like Bitcoin as well. It's no different, really. Bitcoin dominance, as you remember, is going to have a reversal, and so I'm going to look at this could actually slip further down a bit more, but it might just hold. I don't know, but I don't see it going past this level. Basically, that the trend line's there, as well as the 200 moving average. So the 200 moving average, as well as the trend line, is going to be strong, and the Fibonacci, it's going to be strong resistance for Ethereum. So if Ethereum was, and it's pretty much done it, really, when you think about it, that was already done. So it sort of actually that was done, wasn't it? So it wicked up, it got knocked back, but not on the 414. It was just above the 200. So this level did it, and it has confluence with this level here. So that this, if we do a volume profile, I'm sure that's going to be the case. Let's have a look. And if we look at the volume profile on that, right there, I usually align it, and I'll make it white. And it was perfect. There you go. The volume profile for that was our rejection point. So I can get rid of that. Whoops. So that makes sense. I can actually tweak this a little bit, and it'll still make sense with that trend line. So volume profile and the trend line, that's going to be a strong resistance, and it's already been proven the case. I don't think we'll get there. Probably second time round, that middle section there. So what we'll do is, from an Ethereum perspective, if we were to get a bounce, I will be looking for a short. Actually, that would be a nice level. If it was to get to that level, the 414 is there, perfect shorting position for further downs. Because I do expect, anyway, we'll see that. But if we were to get a bounce, that will be a nice shorting position. But that's not to say that this can't go down a bit more. If Bitcoin was to go down, wick around, Ethereum might just drop a fair bit, and then we get this move to the upside where this could be a good position to short. Just give me a sec. I want to see my YouTube and see if there's any questions there. Let's see here. If there's any questions, I'll answer them. No questions. All right. Cool. I think I'm done with the big Ethereum part to it. On Ethereum, we had this. Where is it? Where we go again? I've been so far so good, right? I'm pretty happy with that. I did say this was going to break down on my post, on the video post. Unfortunately, I didn't short it. I shorted something else, but Ethereum gave better results, better percentage. So I should have chosen Ethereum rather than. I actually did Matic, and actually that did not bad as well. That dropped a fair bit, and Bitcoin. I didn't want to. I should have done probably Ethereum a bit better. But yeah, so if you can see, this is the left shoulder, this is the head, and this is the right shoulder. We pretty much hit our target. And that's why I do think this is going to go sideways potentially for short term before we go down, because we reached our target. I don't see a big rally going up. Wouldn't be surprising to me though that if we couldn't go higher. Really depends on what the SP 500 does for the week or the coming, the next month. We might even be able to go higher, but I don't see it going really high. From an Ethereum perspective, if it was to break that level, I do see that as resistance as the maximum can go. So if we were to break that, so just say this goes a bit further down and then wicks back up sideways, excuse me, then we can potentially hit the trend line there and hit that resistance layer as well. So I will put it like that. That's the resistance layer if we were to pass this point of control. Give me a sec. Every time I start talking a fair bit, my voice starts giving up on me. All right, so that's pretty much Ethereum. Those who are interested in Glimmer or Moonbeam, I've been talking about this as well, and pretty much hit my target. Though we could potentially so in that range, and we can potentially see another move to the upside. However, with Glimmer, we have that trend line, and I do see this coming down further. So the alts are going to still get hammered, get beaten down, and I'm just trying to get an idea of what this means. We can have this as well, potentially. We can go break out of it, bit of a fake out, and then back down. So Glimmer, I did say I'm interested in these areas here from a macro perspective. So we could potentially, long-term wise, have accumulation in this area before we go reversal. This will be a nice accumulation range. If it does come to this level, and depending on what Bitcoin does, I'll be start to layer in, average in, and look for the dips within this area. Hopefully, that the lowest I got here is 20 something cents. Actually, this could be the one, 32 cents. So based on we just want to see how this works out before we can say we can adjust it. Initially, what I did was pretty much from these structures, I done a fib extension. All right. So I did a swing low, swing high, and we got our 1, and then we got our 1.272, 1.414. So just from this initial phase, and it's working out so far. So we might just go a bit lower. So we passed the 1, so the 1.272 is next. And we just want to see what takes place. Hopefully, I wouldn't trust this line. I'll just get rid of it because it's just, we don't really have any reference points for that at the moment. Only reference point was really 2 points there. And if you extend that, whoops. That doesn't help, does it? You can see that they found some support, but break through it. So that trend line becomes null and voided. But if you know, in many cases, sometimes they do dip below it before they go back up. So it's a bit of a fake out in a way. But if we were to do this, we can see that channel. You can potentially come down to this channel, the bottom of this channel. I'll put that away for a sec. We can potentially go down to this channel in a bit of extension, so it fits the model, the bottom of the channel. Based on this the top line, actually, let's see how that goes with. Okay, that's not going to help us. Too squashed up. So if I was to get this and squeeze that in, 2 points, we've got the top 2 points. This, depending how sideways, if it goes sideways and then drops, then we have more of a reason to feel good about it. Anyway, so that's what I have for Glimmer. And what else we got? Let's see how okay, coin. I just don't want to miss any trades. Right. And people have been following me for TrueBit. Done a few TrueBit stuff. You know what I'm thinking about. Actually, it's not looking bad. We've got this 4-hour chart. Bullish, yeah. So the bullish divergence come into play. We also have. Doesn't mean it's going to stick, but we have this trend line. So if we continue on with this trend line, we might be able to see a bullish breakout. So the 4-hour, that was it. So now it's playing a support. We might actually go up with, yeah, we might actually go up. This is looking strong. That's looking good, MACD. And a bit of a support line there. So it could be a bit of at least we can hit the top. So it's not a bad move for TrueBit. That's about 17% move. I think that's a bit of a green candle as well. It's going sideways a bit, but yeah, I think it's doable. And then take some profit, and let the rest go. So that's my thoughts on TrueBit. I had ADA. Let's look at ADA. ADA's pretty much looks like a bear flag, to tell the truth. And if we get from the bottom to the top, you can see the 618 is holding ADA up. Very clear. That looks a bit messy. So you can see ADA in a sense. I do see this as a bear flag, a continuation. I don't see this as a reversal. The question is where you find your shorts. So if we look at ADA, we've played our distribution. That was the neckline. And we had this nice, actually there was a bit of deception there. We had that wedge and the reversal breakout. Was a good breakout. But if you know the Wyckoff structure, this neckline was very important. And the moment we broke this neckline, it plummeted, as you can see. So you can see the retest. You break that neckline, the retest, and then rejection. And I think that was a good move. See, I should have shorted ADA. Okay. Well, anyway, so that's what I have at the moment with ADA. I'll be looking to short it, because, and actually, where are we now? We're up to 35. Geez, I better check my thing. So it didn't go all the way down. Okay, I have some orders. I better check to see if I don't mess up. So if we look up closely with ADA, this could break down easily as well. So I don't trust this line. That looks like a bear flag to me. It's unlikely to. So what I'll do is it's unlikely to break up to the upside. There's a chance, but I do see this coming down. So this is a bear flag, and then if we were to use, so we already did that, didn't we? So what have I got here? Okay. So if it was to go to the upside and he hit our one. Okay. So that was the one, and I was looking for a short. I did short actually. So that's a bear flag that that looks similar to Bitcoin when it dropped in that phase. So that would have been a nice entry to short. If we look at this, it does seem like an ascending wedge or channel. You can say take that out for a sec. At the moment, it does look like if it doesn't continue to the upside and breaks down, we'll find eventually a breakdown. And looking at that, if it gives us that chance, we see a continuation pattern, which is the head and shoulders that does it as well. So the head and shoulders is it's a continuation pattern, just like an ascending wedge and so on. So this can play out and just grind this neckline, and then we go down. And the short-term target will be this height. Give it whatever structure it is. If it was to break down, we will look at 30 cents roughly for that. And just to check from a different perspective, I'll get my fib extension, swing high, swing low, swing high, and you might actually go, give me a second, do I take this wick? No, I don't take that wick. I'll use this body of the candle. That wick is a bit deceptive. 0.786 makes sense, but it could be worse. So I think this local will play out there, find a little bounce, and then continue on to the one. So that will be my averaging in, I suppose. And if I look across, that was support. So if we were to come down, what we can do is, let's have a look at this, if this is a measured move. Yeah, that sort of works out as well. And now I'm seeing that fib fan is also in line with that. So this fib fan is also playing a part, and the macro Fibonacci of 0.5 is also playing the part. So this measured move has a lot of confluence, and let's just add some moving averages. Or actually, let's try this one. That's not going to help us. Give me a sec. All right, what I'll do is add this template. Let's see what it does. Okay. It went to Ethereum by accident. Okay. And let's go to the daily. Because I got the moving averages and I got area wave count. Let me just clean that up a bit. I'm not interested in the top. The weekly. Okay, there we go. There's a weekly. It's just got into the picture. So what we have, see this green line? That's the weekly 200 moving average, and ADA doesn't have too much history for the 200 weekly moving average to come in, but you can see it's coming to the picture, and it acted as resistance, acted as support, acted as resistance now. Okay, so what's this one? I don't need that at the moment, short term. So yeah, that makes plenty of sense as why we find that level of significance. So this is going to be definitely a strong resistance if we were to get the bounce. I don't think we'll get past it. That's why we've got a good rejection. Straight away, hit the 200 moving average, bang, got rejected. And I think that will act as resistance for some time. So we wicked below it. We jumped. It tried to use our support, went down. So the fact that it's messing around with the 200 weekly moving average shows me that it's eventually it's broken down. It couldn't hold it. So this is a daily. So the daily went above it. We had a nice move to the upside. It tried to use our support and try to continue, and it found bearish down pressure, and it didn't hold. It came there, no green candle, dropped. Now it's acting in resistance. So it gives me more confidence that this is going to go down. Okay, so I'll be looking to start averaging at 24, 25 cents. We'll see if it gets some support on 29, 30 cents, but I don't think so. Having said that, let's have a quick look at volume profile while I'm here. Let's just see what this volume profile tells us. Okay. So we have 1 point of reference there and another point of reference there. All right. It'll be interesting to see how that works out when it drops. Not if, I think when. All right, that's what I got for ADA. And what else I got here? Something really different. Luna. All right. I thought I'd have a look at Luna, revisit it. And that's weird. That's when I think Luna. Yeah, so there was a big gap there. If we go all the way to the bottom, there you go. This is when they convert the Luna version 2. We had that spike. You probably get 1,000 or 1,000,000 to 1 Lunas converted, and so now we've got the new version Luna 2. And if you're interested in it, I still think it's going to drop down more. And I got the 1.618. That's still a fair bit of a drop. At the moment, it's holding on the 1.412 based on this structure. And that could be another 20% move. And then maybe that's the bottom. I will throw a few $100 on it. It's worth the risk. And just leave it. Because the Luna team was good. They stuffed up with their strategy, but the solution's good. Algorithm stuffed them up. And hopefully they fix it up. But long term, give it 5 years. If you put it there, who knows, 4 years, 3 years, 5 years, it could be all-time new highs again. Anyway, so that's what I'm thinking at the moment. What else do I have? Arweave. I was looking at Arweave. Looking at Arweave to go long term. Short term, I thought it might be accumulation. I'm comparing it to this bottoming structure. So we're looking for the second test, which is depends on Bitcoin. So second test, phase B. We can have that level there. So I'm just keeping my eye on it. So far, it's looking good with the wick-off structure. I don't see it going much, really. This is a reversal, but then up to here and then pretty much back down again. So I've got this macro. So we've came in. When did it come in? When Bitcoin hit its 64K, it dropped. And so this is like all the new coins, they're all going to drop. Because the new coins that come in the bullish market, they're going to have new lows. And if I was to use this strategy and just reverse this, simple as that. Maybe not. Then we'll put that back. I wasn't looking at it properly. If I was for Arweave, I think I'll make it the last one. TA. So if I was to use this big structure, let's just get rid of that. Oh, that's nasty. That's not gonna work. I'll put it back in. What I want to do now is, give me a sec, guys, and I'll show you the 618 structure. Oops. And I'll reverse that. I need to put that in. Yep. There we go. So just the golden ratio Fibonacci is what I'm using. So 618. Where's the 2? I'll add 2 to that. So I do see 2 and then 2.618. Okay. So I'll be looking at this level here as a next level of interest, and potentially it can come down weave all the way down there, just by using what I have at the moment, just by making some assumptions that this top structure from there to there is my reference point, 0 to 1, and we can see that the golden ratio is, so it couldn't hold a 1.414, it went below the 1.618, so we go to the next fib level and the next fib level as it goes. This could also be like that. Don't know. We'll see how that works out. This could come all the way down here as well. But I can't put much reliance on this one. Let's see how if I adjust it. Does that make sense? Yeah, it does make sense, a bit better. And the bottom of this channel could be the case. So if this was to plummet, I do see that. Maybe there or there, and then up. So if that doesn't hold, we can be down to the bottom of this channel. That's still a fair bit of a move. So if you look at that all the way down there, that's a lot of move. Yeah, that's probably not right. I think that's more realistic. Another 50%. This probably be the case. Can we see a reversal structure? What can we use? If I was to add that in, I'm gonna just this template goes to Ethereum for some reason. I wish I could change that. I need to find out why that works that way. So you can see the 200 moving. Actually, we can just move that. Actually, what I want to do is this. If you want to go long-term R-weave, I think it's a good project. We need to find the bottom, and that does look like a bottom on the daily. A bit of bullish divergence potentially. It doesn't really give us much, except for that this is resistance. Maybe I'll look at a different time frame. Let's look at 2-day. 2 days a bit better. So it's close to the bottom, what it does look like. So we had that breakout. This is flat. So I think it'll stay flat. And we'll just use these lines at the moment and see what it does. If it stays flat, that just means it's just bearish and that could keep dropping. It doesn't look like there's going to be any bounce. You can see that reversal took a while on the 2-day. So that bearish divergence took a while for bullish divergence to play out. So that can drop a fair bit. So we want to see a bullish divergence to be confident as part of that strategy. At the moment, there is none. There's no bullish divergence at all on the 2-day. Let's look at the 3-day. Let's see if that gives us anything. Yeah, so nothing. It's pretty bearish, and you can't blame it. Even the 3-day. So looking at this, no momentum to the upside, all downhill. I've been shorting ARV. I could have done a better job in shorting it, but that's pretty much it. So I'm looking for this bottom around here. I think I'm going to wrap it up, guys. I'm looking at the charts that I've opened, and one thing I'll do a plug-in for you guys. This is the group that we're in. It's got, where is it? It's got a bot. I'll just grab that. I'll paste it. You got 10 days free trial, no obligations to pay. I've just posted that bot, and it gives you access to our channel. Also, in my signature, there is so this only lasts 10 days. I'll also put there, you can come there and I'll add you to our group for that. And you can see all the materials that we talk about, topics and so on. And the last of all, if you're a newbie, this is my website. Still not finished, just takes too much work. But there's free materials, so you can click on here, and for the newbies, just there's the stuff that talks about all these chart elements. You don't have to sign in. You can just go in there and click on it. But if you want to get good access to a lot of the other stuff, then you've got to be a subscriber. And also, I do training, and the price, I think the pricing's there, still there. Yeah. So I do one-on-ones, teach you 5 strategies and so on. So there's a whole bunch of stuff. I'm just building up this website in a big way, and here's a tip for you. This is what you'll benefit from, a whole bunch of stuff. And for a quick reference, I've been building up this this page. You can have access to it straight away. It's all links, and I'm just building up the links. All useful links. So exchanges, useful tools, launch pads, bridges, and even some stuff like here, reference. Just for anyone who wants to use it, you can use it. Okay, so it does my head in having all the shortcuts. I'd rather have it on a web page. And I'll give you an example, right? Greed and fear and greed. Well, I haven't looked at this for a while. Ooh, okay. It's at 6, extreme fear. Still, I didn't realize it was that low. Yeah, let's see how this works. Where's the chart for it? Here we go. Let's look at the yearly. Let's look at the maximum. Let's see what it does. So we're pretty much to a 220 bottom. I didn't have it before that. Bugger. I like to see the 217. This is not going to help. I like to see the 217 and COVID. Is that the COVID? Yeah, COVID's there. So it went really low. Are we that low? Close to it. So we're probably due for a bounce, which sort of indicates of the Bitcoin dominance. But yeah, that's my whole point. You can go here. There's another one here. So if you're wondering, if you manually type your stuff in for your trading view, you don't need to. You can just download these and import them. So there's another useful tool there. You got volume monitor. Volume monitor is pretty good. You let it run, leave the page open, and it will populate information. You got the reference material, and you can pick up some stuff there as well. So anyway, so useful links there. Some of it's stuff pretty obvious, and I'll leave it at that, guys. So please give me a like and share. Come and join me on the YouTube if you want. I also stream it there, and hopefully everything goes well, guys. Hopefully you're not fully into crypto altcoins at this point. It's not a good. Yeah, you just bleed if you're still going to hold them. Well, it's pretty late now. But I do feel for those people that came late into picture for Bitcoin or crypto without knowing the charts. It's disastrous. You need to know. Even the experienced ones don't know how to get out. So if you want to learn how to invest and manage your risk, you need to be trained. As I said, I do one-on-one training. It's not a quick solution for you guys. You need to, in the bear market, it's probably the best time to do the training. So when the next bull market comes, you're ready for it, and you can maximize your gains. So come join a community, and you'll pick up stuff along the way. And if you do the course, even better for you. And I'll wrap it up that. And have a good weekend. Talk to you soon. Cheers.